Hi there, this is Chris from Money Hub, and this is a quick summary of our comprehensive car finance guide. So, we've written a large guide, probably the most authoritative one in New Zealand, but I just want to break it down step by step here so you're not overwhelmed when you get into it, and it'll make it much more easier to navigate. So just as a background, we know that car finance can either be quite good value or horribly unaffordable. There doesn't seem to be much middle ground based on the research that we've done and the stories and observations that we're aware of. So what we want is people just to make sure they're fully informed what they need to know before they go down the car finance route. Because if it is unaffordable and if it gets too expensive, this is not some sort of debt that you can push back or, roll over to the next month. You have to keep paying it to keep your car. If you don't pay it, they will repossess your car. Whoever lent you the money to buy it, if it's a car loan or a secured loan, it will be repossessed, and most car loans are secured. So that is a major issue. So people do feel trapped that they have to keep paying when it's high interest, but there's many ways to avoid a high interest rate, and it really starts with making full comparisons, not rushing in to car insurance. It sounds very extreme, but the problem is if it's done wrong or done incorrectly, then it's just such a long term costly. Most car loans last for 3 to 5 years. So you can imagine if you're overpaying a week after week or month after month, it just becomes a massive headache, and you just want to get rid of it. But the problem is you're trapped into paying for it. So if I just overview the guide quickly, we've got a little bit of an introduction here, just making clear that this is not for bad credit. So if you do have bad credit, then we do have a dedicated guide for that. Secondly, we've got a guide to mechanical breakdown insurance and gap insurance. Now, these are both sold very much alongside car finance, and that can either be through a bank or a finance company or a specialty lender or the car broker that you buy it from or the car dealer. Just be very careful of these. We've got dedicated guide and video for mechanical breakdown specifically, just because we want people to know exactly what that is and what they need to be aware of. So we've done a quick summary here, and you can put in how much you want to borrow. So if you wanted to borrow $5,000 and you wanted to borrow it, say, for 3 years, which would be 36 months, then this would give you the introductory rates and what you could be expected to pay weekly, and then you can change it to fortnightly and you can change it to monthly. But do be aware that you need to make comparisons and make applications to be able to know exactly what your repayments will be. They will vary based on the interest rate that you're offered. Some may offer you a higher interest rate, some may offer you a lower interest rate, but just like anything, like car insurance or home insurance or phone plans or power, you need to make comparisons to be able to make a proper choice, because there is a big difference in interest rates. And when it's talking about $5,000 or even $10,000, that still adds up. So we're very, very cautious about people rushing into car finance without doing proper consideration. It just gets too expensive too quickly, and there's too much money in it for the people selling it to you for it to be not taken seriously. So you've got to put the time in to make proper comparisons. Lots of people spend a lot of time on looking for a car and they rush car finance. The problem with that is it just becomes a long-term cost that they shouldn't have gone ahead with. So it's sad, but it's true, and it's very common. So just as a background, what is car finance? So there's two options: a personal loan. These will either be secured or unsecured. Most of the time they are secured over a car, and then also car finance, which is a specialist, sort of really like just a specialist personal loan, but it's sold largely by people in the car industry or sort of certainly looking after people with cars. And so it can be offered by banks, but finance companies and specialist brokers are the ones that we see the most of, and there's plenty of them as we've listed on this guide. And with both options, it's clear to know that you do own the car, and but it does mean that the debt is secured, so that if you can't pay it, then the lender has the power to repossess it. And that is really, really important because it's not, as I previously said, it's not a debt that you can just push back till next month or next week. You've got to keep going, otherwise, they will come and get that car. So, we've done a little comparison here of the different options. There's car loans versus leasing versus balloon payments, which you'll often see with new cars being sold, versus using a credit card to buy a car versus paying cash for a car. So that's just quite useful to have a look at if any of those appeal to you. And we're really just looking at who owns the car and, are there any restrictions to it, what kind of debt it would be, how long it would take to clear, the financing slash, whatever, however you finance the vehicle. And then looking at, what things we need to consider. Now, the most important thing here is really our tips to help you save. And most fundamentally, for a car loan, the best car loan is going to be the one with the lowest interest rate, the lowest fees, and the shortest term. That really makes a big difference, because even like an 8% for 3 years is much better than paying off an 8% over 5 years, because you'll pay two more years of interest costs. So please keep that in mind, that you're really looking for. It may have a higher payment that's still affordable in the short term, but if it's only 3 years and you're being offered something with 5 years, then I'd really look at the 3 year, and make sure that the interest rate, of course, is lower, or just comfortable with that, because these things do make a difference, and you just don't want this debt dragged out with you, or sorry, dragging around with you. And yeah, so as we've said, most car finance terms are up to 5 years in length. There will be some which are 1 year and they roll over, some which are 3 year, which can be standard. And as I said, early repayment was going to slash the interest cost, but just make sure that you know that you can make early repayments. And some of the car loans let you, some of them have a penalty fee. So if that is something, because often people take down loans, they get a promotion, they find themselves with more money suddenly, so they want to clear off their car loan, just make sure that you can. And a lot of people also think, well, should I just add it onto my mortgage? You So you can do, but the problem is that it does cost more in the long run, because you may be locking it in for 20 years, 18 years, however long, and you keep paying it. So it's definitely worthwhile considering that. And missing repayments is a massive no-no. And we've done a big guide to making sure you know which options are available, and just trying to make it as simple as possible to get the quotes to make these comparisons. Now, we've got 10 must know facts here, and these are really important because they're just going to give you like an understanding of how car finance works. And so I'm not going to summarize these, they're pretty self-explanatory, but they're really looking at, the interest rate, how it works, making sure that you understand the time frame, making sure that you can actually afford the loan, and that's really, really critical, and who offers car finance, and then what you need to really make a strong application, because if you don't have a strong application, you'll be offered either no loan or a very high interest rate. So it's very, very smart to just put the time in up front, and make sure that when you go out, you can get something which is affordable, and which you deserve, really. We've also got a summary here of making repayments, and then if you have noticed problems with the car, make sure that you target those and to remedy them, because a lot of the time car finance cars become a broken, also they break down. I mean, not a lot of the time, sorry, but it can happen. If you don't have the money to fix it, you've still got to pay for the car, ongoing, and you also need it fixed to be able to get to work, help with your family, etc. So just be aware that these things are, very much essential to consider. And then, yeah, we've got a little summary of how to make the application, and then a checklist to make sure you're not paying what you shouldn't be paying. Please, please do shop around, because, as I said, the spread, also the difference between the car lending is significant. And then finally, looking at the different fees. So we've listed some here. You can download fee schedules just so that you understand those. They will differ between different car lenders. And then finally, we've got a frequently asked questions. So if you do have any questions, please consult this. It's quite useful. You can also leave a comment down below. We're very active in making sure that we respond to those. And also you can send us an email. So thanks very much. Whatever you decide to do, we wish you the best of luck, but please don't rush into anything, and certainly make sure that you've compared your options and made applications before you go to a car dealership, because there is too many situations or too many stories of people just walking onto a lot and signing up for a car because they want it and just getting a very bad situation. A few months later, they've got to keep paying for that car that they bought that Saturday months and months ago. Thanks so much. Not trying to be negative about car loans, just wanting to make people very much aware of the risks and the costs. Thank you.